Alright guys, you don't want to miss this one. It's the year-end review and there's a lot going on. I just got done doing like 5 hours of numbers and paperwork so I can break everything down for you. And I actually still haven't done the monthly gain or loss. So I'm going to do that at the end of the video. Post it in the thumbnail of the video, but it's going to be pretty easy to figure out. Okay, I'll tell you at the end. We'll do it together. But I have a bunch of numbers. I'm gonna run real quick through the accounts just to show you the year-end positions, and then we're gonna go into the spreadsheet where I've done all the numbers to show you exactly how the performance has gone. And let me give you a heads up, it's not pretty. It's not pretty. So this is the account, 136,000 here. This is year date. It should be pretty much the same as the 1 year chart. So 1 day performance, this is way back last, I think Friday was, when was the last day open? Friday. The 1 week performance, and this is the 1 month, down 24%, 3 months down 10, year to date down 26.42. So definitely got beat by the market this time around, which is a little bit disheartening. We're going to go to the SPY and figure out what the SPY did. Must have missed it here. Okay, so the 1 year on the SPY was minus 19.43, and I'm down 26.42. So pretty bad. I don't like getting beat by the market at all, especially at year end. It hurts even more. The all-time chart, I'm still, doing better than the market a little bit, I think. Up 90% over the last 4 years or so. I started investing here August 28, 2018. With this account, and the SPY over the past 5 years is up 43%, so a little bit more than double the S&P over the last 4 or 5 years, but unfortunately suffering some losses year to date here. I was doing really good at one point. Over here I was up 15% on the year in August, and then it just went downhill from there. Apple, Smith & Wesson, Paramount, Chinese stocks, everything went down. And so I wasn't able to make any money. But it's a very interesting breakdown, though. It's not just the fact that the stocks have been going down. I've actually made a ton of money this year from premium. And I think you'll be very shocked as to how much money I made in premium this year. It's just an enormous amount, all right? And still able to be down 50,000 on the year. So I don't understand. So let's go into the numbers without making you wait any longer. I'm not going to shift them. It's just going to show you the conclusions here. So it's kind of hard to see if you're on the phone, but premium. These are numbers of up at the top. The green ones are numbers that I've made from selling and playing around, selling and buying options all year. So every single month was profitable except December, where I was down only $66. So my premium selling and buying has been doing great. The real losses have come from the collateral deterioration. So that's where the losses come from. So I made almost $50,000 from premium this year in 2022. Almost 50K. $49,769 from premium in my pocket. You know what I mean? Dividends 5,530. It's not a bad number for dividends for this account. 530. And even through all that, I was still down 49,154 for the year. Very impressive, right? These numbers are basically just cash at year end, which is how much money I owe versus have in cash at the end of the year. So I owe 118,000 to Robinhood, a little bit more. And margin expense is just how much margin I've paid in interest, how much interest I've paid for my margin over the year, which is 3,679, which is less than the dividends. So dividends kind of have covered up my ability to borrow money for the year, so that's good. But even through all that, look at this. So from trades and unrealized gains and losses, it's sitting at over $100,000. So $100,000, 774.94 to be exact, is how much my collateral has deteriorated over the year. I mean, that's quite insane. So if I was in some normal stock, if I only played Apple, I'd be doing much better, right? But it just tells you how much the market has gone down. I mean, that's incredible. So imagine I didn't do any premium at all. I would have lost 1/3 or so. So I would have lost actually way more. So 26, I would have lost half the account if I didn't collect any premium on the way. Which would be, 25%, but let's say leverage, it'd be 50%. I would have lost half the account. So I haven't lost half the account from the peak. I mean, half the account from the beginning of last year would be 90,000. I'm sitting at 136. And half from the peak at 2014 would be 107. And I'm sitting at 136. So from the peak or from the beginning of the year, I still haven't halved it. So that's good. But it still really hurts to see. It's tough to see all these profitable months. Look at this month over here, April. I gained $9,000 in premium alone. That's insane, right? And still, look, really, really weak end of the year. I can go more in depth on the account if you're interested. I'm gonna go into the investing tab here just to show you the debt. Right, it's 118,617. Roughly 50% of all the money invested. Total market value is 255,512 at the end of the year. These are the positions based on equity. Apple's still the largest one, then Smith & Wesson coming in at 70 grand. That used to be over 100, but Then Main Street Capital. Total return, Apple's still in the green after all these losses. Realty Income still in the green. Oh, I bought like a bit of Coinbase just for kicks. For a short-term play. Who knows if it's going to pay out or not. I plan on exiting as soon as I can. Main Street Capital. And then, Paramount down 12 grand. Smith & Wesson down, 34 grand. So basically, this is where the losses are coming from. Some of the Chinese positions, some of the leaps. I'm down like 5-10 grand on that. And these two companies is where the collateral deterioration came from, really. And also Apple was up a lot. So I was up like 40 grand on Apple. It's down like 50, 60 grand. And it's down. So that's 50 grand right there. Another 45 grand here. And then another 10 or so grand from the leap options. And that's where the collateral depreciation is coming from. So anything else you want to see the account? The account is pretty public. It's extremely public. Everything is available for you to see. So whatever you want to see, just let me know in the comments and I'll show you how I've been doing. I have options collateral about $18,000 because I've sold some puts. I've still got 20,000 buying power. I've explained why I still have buying power in previous videos if you want to check it out. These are all the positions at the moment. You can feel free to pause the video player at any moment to try to figure them out. All the information is contained in this little box here. And these are the positions at the moment. Apple, Realty Income, Main Street Capital, Paramount, Smith & Wesson, and Coinbase. Like I said, I'm not a crypto guy. It's just for a short-term play. We'll see what happens. Okay, well, that's basically it with the account. It's been really tough to watch, my premiums roll in extra money and then keep watching everything underneath it deteriorate. It's been pretty depressing. Hopefully you guys haven't suffered as much loss as I have. Maybe you've suffered more. I'm sure many of you have invested in tech companies and what have you, and been watching your account go down. Even if you're a dividend investor or even if you're just a blue chip investor, probably still seeing your account go down. Maybe not as much, but everyone's down around 20% or more. So I guess I'm with everyone. Like I said, it doesn't feel good to lose the market, but hopefully next year will be better. The plans are to keep doing what I'm doing. There's going to be bad years, there's going to be good years. And hopefully over the long run, we've made some good decisions that continue to grow the account. It would be pretty unfortunate if I had to release a lot of this collateral right now because of market conditions. I really want to hold on to all my shares. I think that there are, bright days ahead for all the companies that I own. So we'll see what 2023 unfolds. One hopeful fact, I guess, or condition, market conditions that I kind of hold on to is the fact that there's a ton of cash laying around. If there isn't cash in people's brokerage accounts, they are in treasuries, and these treasuries could get sold off, to go into stocks. The conditions and the market sentiment just has to change. There's a few things that could help that. Number one is earnings. And I do think that Apple is going to have strong earnings, but perhaps not the rest of the economy. We'll see. So earnings is pretty much the big one. And then inflation expectations. People need to calm down about future expectation of inflation. So some of the bonds can sell off. And then even more money will be available to go into the stock market. But, I think that rates and earnings are basically what we're looking for the next year. With that said, hopefully you all have a prosperous 2023. Happy New Year. Enjoy yourselves. I don't know, go work out, take a walk, and do some cool stuff. Enjoy time with family and friends, and probably make another video soon when the market's open. All right, that's it. Peace out.